Hey, and welcome to Triple Bottom Trading. I'm your host, Thomas. Those of you that know me call me Thomas the Bear. Those of you that don't can call me either. You can find me on Twitter at BTCPathobear, where I post my macro outlooks, my trades, trade ideas, and general ramblings. Today, you've joined me to talk about the Mayer Multiple. Those of you that are familiar with crypto and Bitcoin, this is going to be especially interesting for you. So let's jump right in and find out what the Mayer Multiple is. So that is Trace Mayer. On the right there, he is the gentleman who created the Mayer Multiple as a way to analyze the price of Bitcoin in a historical context. The Mayer Multiple is the multiple of the current Bitcoin price over the 200-day moving average. We'll get into how that's calculated in just a second here. The Mayer Multiple is not an indicator to time the buying or selling of Bitcoin, nor does it indicate a period to hold Bitcoin. This is very important. It is not an indicator for those of you who are day traders or looking to jump in and out of positions. This is simply a way of telling you if it's a good idea to buy Bitcoin or it's not a good idea to buy Bitcoin based on Trace Mayer's Mayer Multiple, which we're going to jump in and try to understand the numbers behind it. So how's the Mayer Multiple calculated? Well, it's pretty simple. You just take the current price of Bitcoin and divide it by the 200-day moving average. Well, what's the 200-day moving average, you might be asking? Hopefully you're not, but if you are, it's pretty simple to understand. It is just the last 200 days worth of the closing price to the day of Bitcoin. So that price is taken, added up for the last 200 days, and then divided by 200, and you get the 200-period moving average. You take, again, this is the Bitcoin current price. This is a spreadsheet that you'll have access to. I'm going to post this in the description below. This will update by the second in Google Sheets, and it'll spit out the Mayer Multiple right over here. It also continually updates the 200-period moving average. Very simple to use. In fact, you don't have to do anything. It's pretty cool. I have a little warning here that the Mayer Multiple is not a good indicator to use as a buy or sell signal to time the market. Remember, we're not timing the market here. This isn't for day trading. Also, I have above it, buying Bitcoin at Mayer Multiples below 2.4 is best for long-term accumulation. Let me just show you that spreadsheet really quickly here. So this is the Google Sheet here. We've got the pretty much the same values. This is just updated. Here's the link. I'm going to stick that in the description. Again, very, very easy to use. All right, cool. So let's continue on. How is the Mayer Multiple used, and what is that 2.4 number I just mentioned? Well, accumulating Bitcoin at a Mayer Multiple of less than 2.4 had the best long-term results. Okay, so you're probably thinking, well, what's this 2.4? Well, we're going to show you on a Tradingview chart, and we have a really nice Mayer Multiple indicator. So for those of you that are visual learners and want to see how this is practically applied, just hold on a second, we'll get there. The Mayer Multiple is best for investors on a long-term Bitcoin buying program, not for active day traders. Okay, so that's for people who are on a sort of like a cost averaging plan where you're going to buy this maybe once every day at noon, or once a week on a Wednesday at noon, or once every second Wednesday, so you're buying twice a month, whatever it may be. This is simply distilled down to, can I buy Bitcoin or can I not buy Bitcoin on that day that I'm cost averaging my Bitcoin purchases? Is it above 2.4? I can't buy. If it's below 2.4, then I can. Let's get into Mayer Multiples below 1. That means that the Mayer Multiple, or the price of Bitcoin, is actually below the 200-period moving average, right? Because we just went over how you simply take the Bitcoin price and divide it by the 200-period moving average. So if this number is bigger than that number, it's going to be bigger than 1. If the current price of Bitcoin is lower than the 200-period moving average, obviously the Mayer Multiple is going to be less than 1. Now that's categorized here as a bear market. That's when, as we just said, the price is below the 200-period moving average. Now the interesting thing to note here, and this is where the Mayer Multiple becomes particularly fascinating, is that significant moves below 1 indicate areas for major market bottoms. In 2011, the Mayer multiple was 0.237, and in 2015, the Mayer multiple was 0.407. Those were historically low numbers. And then for Mayer multiples above 1, that means the price is above the 200-period moving average, then we're considered to be in a bull market, and values significantly above 2.4 have historically signaled market tops. So let's jump into a chart and take a look at, first of all, how to use Tradingview with adding the Mayer multiple indicator onto it, and also, let me get this to load here, and also how we're going to go back and analyze and take a look at when the Mayer multiple was below that 1 level or above that 2.4 level, and how to use that. So if Tradingview will cooperate with me here, then we can go ahead and do that. So the other thing to mention before this thing pops up is that I'm using the Bitcoin Liquid Exchange, or the Brave New Coin Liquid Index, and that's because the other exchanges don't actually have enough historical data for us to use where we can come up with the necessary data, right? They're only going to provide us back to about 2013, 2012, and we need to go all the way back to 2011. So first things first, this is a blank chart. We're going to add the Mayer multiples. So the first thing you do is click on indicators, type in Mayer multiple, and the first one that shows up is by Unbound. Thank you for providing that. We're just going to add that to our chart, and boom, this shows up at the bottom. I do a little fiddling here with the settings just to make them more easy to see. We don't need the moving average of the Mayer multiple. We just need the Mayer multiple itself, and that threshold 2.4 is in red. I like to make that a full thick red line. Same with the Mayer multiple, and we can easily view this on the chart. Okay, so we're on the daily here. Let's go back to that 2011 period when the Mayer multiple was extremely low and see what that meant for the price of Bitcoin. So let's zoom in here, make this nice and big. All right, I really have to zoom in because the last time the Bitcoin price was down around these levels, well, you're going to see in a second. Okay, so back in November, you can take a look at the Mayer multiple down here. Again, remember this red line is that 2.4 threshold. Anything above, can't buy. Anything below, you can buy. So right down here in about, let me just make this even bigger for us to see. All right, so here's where we're looking for our bottom, right? In November 18th of 2011, we had a low of $2.01. And if you go down to the Mayer multiple here, you can see on this side, right here on the left side of my screen in blue, it's going to tell me what the value of that Mayer multiple is. So it's 0.24 on that low of the month of November, and arguably the last time it was that low. Not arguably, it certainly was. So when the Mayer multiple is down along those levels, it signifies that maybe the market's about to turn. And that's why this is particularly interesting, because it kind of enables you to envision that maybe the market's gone a bit too far to the downside and that selling isn't a good idea. I mean, look, I'm not advocating to be using this as an indicator of any sort, but it does seem to do a good job of letting you know that, we're so far below the 200-period moving average. And let's actually put that on our screen here. So I'm going to add moving average, and this will just show up right here. And then we can change the settings. And click that gear. There we go. So I like to actually change this into white. All right, so we're first going to change the length to 200. There we go, and then change that to white. Hold on. All right, well, this is going to be There we go. White, thick line, and done. Okay, so you can see the 200 period moving average was added to the screen. Look how far below we are from the 200 period moving average. When we get that far below, it signifies the same thing in the Mayer multiple. It's just nice to see on the chart that the price has gone too far away from the mean, and a reversion back to that 200 period moving average is likely. So let's take a look at the next example when we were significantly below 1. Let me take this away. There we go. All right, so we're going to go on a journey. And remember, actually, that $2.01 was the last time Bitcoin was ever that low. So it did mark a significant pivot in the market. The last time was that 2014 time. There we go. We are now into late 2014. You can see that here the Mayer multiple was 0.41, and the price of Bitcoin was a low of $163.88, and we never went back to that level. The Mayer multiple sort of bottomed. We never really saw it come back into that level, and that's kind of how you want to use this. You want to use it as okay, it's still good to be accumulating Bitcoin below 2.4, but I'm also seeing that it's probably a good idea to be buying more Bitcoin. Like, I almost want to use this as a tool to be able to size myself into positions. This is something that I've been playing around with. Maybe we'll have to have this as a separate video. So let's put that on the table. Let's keep that off the table for now. But the important thing to realize is that as this thing goes so far below 1, it signifies that the market has gone too far. That's the only thing to take away from this that's important. Now, conversely, the other thing to look at is when it goes very far above that 2.4 threshold. You can see here, there's a couple of these mini cycles in 2013. The last time the Mayer multiple went to 8.23, you can see that was a top, and the market came back down, and it wasn't until later in 2013 the same thing happened where we had this blow off top, and boom, the Mayer multiple went too high. Price went too high away from the 200 period moving average and had to come back down and recheck the mean. So that is how you can see that the market has gone too far in any direction, whether that's to the upside or to the oversold side. It's very helpful to use it in that way. So let's take a look at present day and see what we have as far as the Mayer multiples. So here we are. Actually, the other interesting thing is the most recent liquidity event that we had in the market was the March 2020 sell-off, where stocks collapsed, and then because people needed to raise money for margin calls, they sold off their Bitcoin for cash, and that caused this cascading sell-off. The Mayer multiple actually went extremely low again. That went down to 0.57, and that was the low, and ever since then we've kind of bounced from those levels and have not returned back there since. So again, a good use of marking a potential pivot in Bitcoin. Now, according to the Mayer multiple, we are below this 2.4 level, so it should be okay to be buying Bitcoin according to Mayer's rules if you're on a cost averaging plan. All right, so that's your Tradingview chart. Let's go back to our presentation. How is the Mayer multiple used? We kind of went over that. Let's just go into what Mayer talks about when the multiple is above 2.4 or more. It's considered to be a speculative bubble. That's that manic blow-off phase like we saw back in 2017. That was when Bitcoin went almost to $20,000. Mayer suggests accumulating fiat until the price of Bitcoin drops to a Mayer multiple below 2.4. For most of the 2017 bull market, the Mayer multiple did not exceed 2.4 until the epic blow-off move to 20,000. Now let me see if I can bring this thing back up again, and let me just show you that 2017 chart, if my Tradingview will cooperate again. All right, so 2017, here's that the beginning of that blow-off move. You can see we didn't really go above the 2.4 threshold very definitively until I start scrolling up here, and you start to see, I mean, this thing just went parabolic. This is that manic phase that Mayer says it's not a good idea to be buying Bitcoin at these multiples above 2.4. But the important thing to note is that, if you were accumulating Bitcoin all this time before this thing went above 2.4, we're still, for the better part of over a year, Mayer Multiple is below 2.4. So from 2014 to 2017, you got almost 3 years there where you could have been buying Bitcoin before this thing took off. And I mean, down around here, the price of Bitcoin was $300-400. And then right when it crosses that threshold, the price of Bitcoin gets to $7,000, $8,000, $9,000 before Mayer's like, no, you got to be accumulating fiat. Don't be buying Bitcoin. I mean, you more than 10 times your money, right? So really good system here to keep you honest and able to buy Bitcoin. And then look what happens after this thing crosses the threshold. And this is why it's not good for timing the market, because if you were to sell, once this thing crossed above the threshold, you would have missed out on doubling your money. So from $10,000, this thing went up to almost $20,000. And this entire time, the Mayer Multiple saying, no, don't buy Bitcoin. And sure, it kept you out from buying this thing at crazy levels. But at the same time, if you were using this as a timing tool, you would have gotten hosed. So stay away from that. All right, so some helpful links. We already gave you the spreadsheet. There's a nice Twitter account that Trace Mayer has that'll give you the daily Mayer Multiple with the price of Bitcoin. This was released 5 hours ago, so it's going to be a little different than ours. Ours is up to the minute. It seems like he releases this every 6 hours, so you could either follow this, follow the spreadsheet. It's got the Mayer Multiple, the price of Bitcoin, the 200-period moving average, and the price of Bitcoin has historically been higher 50% of the time based on where we're at. So that's an interesting level, but you can follow that account. And then the other site, which is nice, is if you do not have Tradingview and you want a nice interactive chart, this Willy site, or site by Willy has got the Mayer Multiple here in brown, the Bitcoin price in gold, and the dash line is the 200-period moving average. And you can nicely interact with this chart and see the values and how they all correspond. Again, if you don't have Tradingview or you just want something kind of set up out of the box and don't want to go through the trouble of all of the Tradingview steps that I showed you before. Okay, so that about wraps it up. I hope this was informative and you enjoyed this presentation about the Mayer Multiple. Thanks for joining me, and until next time, take care. Bye.